Hello students, welcome to online classes. In our first session, we already discussed about introduction to GST. In that we have discussed about pre-GST structure in India and what are the problems raised in pre-GST tax structure in India. And in our today class, we are going to discuss about GST model in India, taxes subsumed in GST, nature of GST in India. As we already discussed about meaning of GST. GST is a tax on goods and services with value addition at each stage, having comprehensive and continuous chain of set of benefits from the producers or service providers point up to the retailers level, where only the final consumer should bear the tax. So here the goods and service tax is a value added tax levied on most goods and services sold for domestic consumption. That means the GST is paid by consumers, but it is remitted to the government by the businesses selling the goods and services. GST has been introduced to replace multiple indirect taxes levied by central and state governments in order to simplify the indirect tax system. Here the GST can be termed as one tax, one nation and one market, because before that we have many taxes like service tax, service charge, food charge and other types of taxes, and people didn't know how all these taxes are applicable. But now when GST is introduced, it is easy for the people to understand what amount and why they are paying these taxes. So this is what the meaning of GST. Now come to our topic, GST model. GST model in India. GST model in India. In the conventional model of GST, tax is charged by the central government on all the transactions, and later proceeds are distributed among center and state in certain proportion. Such centralized system of GST's implementation would impel states to lose their fiscal autonomy in levying and collection of taxes. However, this conventional model of GST is not much successful in India. Both the center and state has concurrent powers to the tax various transactions. In fact, this was the one of the main reason behind the states' initial opposition against the introduction of GST. Therefore, the task force has recommended that the GST to be implemented in India would be dual in nature. That means both center and states will levy the tax concurrently. It would consist of two components, one levied by the center, that means Cgst, and other levied by the states and union territories, SGST. However, the base of tax levy would be identical. International experience shows that such models of dual value added taxes have been successful in other federal countries like Brazil and Canada. The GST system in India take the form of dual GST, which is concurrently levied by the central and state governments. So this is what the GST model in India. When you observe the structure of GST, Cgst, SGST, IGST. Come to the Cgst. Full form of Cgst is Central Goods and Service Tax, which will be levied by the central government on the intra-state transaction, and that is transaction in which supply is from one place in a state to other place in the same state. That means CGST is charged by the central government for supply within the state. For example, supply by a person from Punjab to other person in Punjab, that means within the state only. Next come to SGST. The full form of SGST is State Goods and Service Tax, which will be levied by the state government on the intra-state transaction. That is the transaction in which supply is from one place in a state to other place in the same state. That means SGST is charged by the SGST is charged by the state government for supply within the state. And next come to IGST. Full form of IGST is Integrated Goods and Service Tax, and it will be levied by the central government on interstate supply of goods, that is transaction in which supply is from one place in a state to other place in the some other state. That means it is charged by the central government for supply from one state to other state. And example for this is supply by a person from Punjab to another other person in Haryana. And taxes will subsumed in IGST has replaced taxes like central sales tax. So this is what the structure of GST in India. So these are the three types of tax structures is implemented to help the taxpayers take the credit against each other, thus ensuring one nation, one tax. So this is what the GST model in India. Next topic, taxes subsumed in GST. GST is commonly described as indirect, comprehensive, broad-based consumption tax. So the dual GST which would be implemented in India will subsume many consumption taxes. The objective is to remove the multiplicity of taxes levies, thereby reducing the complexity and remove the effect of tax cascading. And the main objective is to remove all those taxes that are currently levied on the sale of goods or provision of services by either central or state government. The substitution of a large number of taxes and other levies which will allow free flow of larger pool of tax credits at both central and state level. So when you observe the central taxes subsumed in GST, so following taxes will be subsumed in central GST. And first one, central excise duty. This form of indirect tax is levied on goods and commodities manufactured within the country. And next one, additional excise duty. This is the duty charged on certain goods which are produced, manufactured or stored in the country. Next one, additional excise duty. It is on textiles and textile products. Next one, duties of excise. It is on medicinal and toilet preparations. And next one, service tax. Service tax is the tax payable on services that are taxable, while in the most cases the service provider is liable to pay this tax. In certain cases the recipient of the service is liable to pay tax. This is known as the reverse charge mechanism. And next one, additional customs duty. This is a type of duty applicable on certain goods in order to prevent dumping or to counter export subsidies. So these are the taxes subsumed in GST on central GST. And next one, state taxes subsumed in GST. So these are following taxes will be subsumed in state GST. Those are VAT or sales tax, sales tax or entertainment tax. VAT or sales tax, value added tax or VAT is the tax applicable on addition of value and is collected at different stages of sale. Here VAT is a consumption tax that is placed on a product whenever value is added at different stages of production. And next come to entertainment tax, and this tax includes exhibition, performance, amusement, game, sports or race, including horse race and exhibitions of films, like such entertainment or comes under entertainment tax from the consumers and pass on the same to the government. And next, luxury tax. like lottery, betting and gambling. These all comes under luxury tax. And next one, octroi and entry tax. In entry tax, the local tax paid on consumables brought to a state at the time of entry. And next one, purchase tax. Unlike sales tax, which is paid by the seller, this tax is paid by the consumer on purchase of a goods. In practice, the seller usually passes on the sales tax to the purchaser in the form of higher price for an item. So these are the taxes subsumed in state GST. So now let us talk about nature or silent futures of GST. Nature or silent futures of GST in India. See, considering the federal structure of the country, the GST in India is having two components. One is levied by the central GST and the other levied by the state GST. However, the basic features of law such as chargeability, definition of taxable event and taxable person, measure of levy, including valuation provisions, basis of classification, etc., are uniform under both the laws. So when you observe the futures, following are the some silent futures of GST in India. See the first one, destination based consumption tax. Second one, dual GST model. Third one, concept of supply. Fourth one, import of goods and services. Fifth one, comprehensive. Sixth one, subsuming all taxes. Seventh one, input tax credit. Eighth one, GST identification number. Ninth one, exports and supplies to cess. So see the first one, destination based consumption tax. So GST is levied at the place where goods and services are consumed. GST is based on the principle of destination, that is, tax is charged at a place where goods are supplied, as against the earlier principle of origin based taxation. So this can be potentially give more revenues to the consuming states such as UP, Kerala and West Bengal compared to producing or industrialized states such as Maharashtra, Gujarat or Tamil Nadu. So next, second one, dual GST model. India has adopted a dual GST model within the center and states simultaneously levying the tax, as we already discussed in the GST model in India. So India has adopted dual GST model within the center and state. The GST levied by the center is called central GST, and that is levied by the state is called state GST, that means SGST. Next one, third one, concept of supply. So here GST is applicable on supply of goods or services, as against the present concept of taxes on the manufacture of goods or on a sale of goods or on provision of services. It means GST will be charged if goods are covered in a definition of supply even though no sale is made. Example, supply of goods to a own branch. Next one, fourth one, import of goods and services. Import of goods or services is treated as interstate supply under GST and would be subject to IGST in addition to the applicable custom duties. And next one, fifth one, comprehensive. The GST is a very comprehensive act and covers almost all goods and services. The GST is applicable to all goods other than alcohol, liquor for human consumption, and 5 petroleum products like petroleum crude, motor spirit, high speed diesel, natural gas and aviation turbine fuel, It is also applicable to all services except a few to be mentioned in a negative list. Okay, next sixth one, subsuming all taxes. This is also we already discussed. Taxes subsumed in GST. GST subsume all major indirect taxes levied by the central government, that is central excise, customs and service taxes, and majority of taxes levied by the state government, that is VAT, luxury tax, entertainment tax, etc. And next one, input tax credit. GST is levied on supply of goods and services, and the supplier is allowed credit for the GST paid on purchases. The credit is seamless except that the credit of CGST paid is not allowed for set of against SGST payable. And next one, eighth one, GST identification number. See here, every registered person under GST, including exporters and importers also, are given a PAN based GST number, which is common to the both state GST and central GST. And next one, exports and supplies to cess. See here, exports and supplies to cess are treated as zero rated supplies. The exporter have an option to either pay output tax and claim its refund, or export under bond without tax and claim refund of input tax credit. So these are the silent futures of GST. So guys, I hope you understood today's session. Again I will meet with other important topic, differences between GST and VAT. Until, be safe. Thank you.